you're still tuned into Taking Stock on CNBC TV 18. Well, continuing our chat then, Jay, I wanted to come to you with regards to Sun Pharmaceuticals. That one reacted to its numbers this Monday. It's down 12% on a week-to-date basis. How would you approach Sun Pharma from a technical standpoint?
Yeah, if you look at most of the stocks in the healthcare space, none of them have had a significant correction since 2012. So basically, what's happening is a long-term correction. So basically, without getting into individual levels of Sun Pharma, I think there could be a bit more downside. BSE healthcare is the only sector which never went below the 200-day moving average since 2012. So that being the case, what's happening for the stock is par for the course. So it might look deep from a short-term perspective, but it could still have a little more correction to come through. But the long-term cycle is still intact. We're looking at fresh highs for Sun Pharma, but let the stock complete its long-term correction. Once that is done, then we can look at picking the stock up for the next up move.
Okay, so the long-term cycle is intact for Sun Pharma. That's the technical word coming in. But fundamentally, Sanju, what would your own view be? Because we've seen stocks like Sun Pharma, Lupin, etc. consolidate for a bit. Is this a good time to be increasing your exposure to these companies?
Sonia, I am not a big fan of Sun Pharma, at this point in time. While I do agree that, in the long run, there's a lot of money to be made there. The fact of the matter is that, no significant EPS increases will be seen before FY17, maybe FY18. I'm not perturbed by the fact that despite a 50% jump in sales in the fourth quarter, the profit after tax crashed by 40%. It was obvious that the Ranbaxy integration costs, would take their toll. But what really spooked me was the fact that the operating margin came in well below consensus at just about 14.5%. And even if you account for the fact that, R&D spend went up to about 9% of sales, and you add that back, the operating margin was just about 22 or 23%, which is still a far cry from the 44% that they logged in for the same quarter in FY14. So, that's a huge fall, and my personal sense is that Sun Pharma has had a brilliant run, ditto with Lupin, though of course in FY17, if you're talking of an EPS of 73 rupees, then Lupin certainly looks far more attractive with respect to valuations than a Sun Pharma. That said, at this point in time, the pecking order that I'm looking at in pharma would be Cadila, followed by Wockhardt, and perhaps Cipla. The reason I like Cadila is that if you look at the fourth quarter numbers, they were excellent. It was picture perfect with an 18% jump in sales, a 40% plus jump in PAT. The profit before tax was actually extremely sharp with a 60% plus jump. And mind you, this despite the fact that the company has been firing on only one cylinder. Their Latin American business has yet to see traction. Their joint venture sales have been muted. The India business grew by just about 9%, but the US business grew by 44% year on year. And even if the stock moves up to 2,200 or so, it would still be trading at just a little over 20 times FY17. So there's a valuation comfort there. But more than that, the fact remains that this is a $6 billion company. And if they do manage to acquire Claris Life Sciences, which has presence in 70 emerging markets, the geographical diversification, I think that will certainly work wonders for them going forward. And while, the management has chosen to play safe on that front, I'm looking at some positive announcements on that front. And, Claris will be a very small acquisition for them, but with big benefits, because don't forget that Claris has just about a market cap of $210 million odd. So I think Cadila, and followed by Wockhardt, which I think has seen a steep correction all the way from 1900 to sub 1400 levels. I'm not factoring in at this point in time any positive EPS, accretion from their Waluj or Chikalthana plants. But even if the Aurangabad plant, adds something like $70 million to their sales in FY17, you're talking of an EPS of something like 85 rupees. But if Waluj and Chikalthana add to the US sales, then, the incremental number in the US sales could be anywhere between $120 to $250 million, which means you're talking then of an EPS of not 85 rupees, but 125 rupees. So, then the run up to 17 or 1800 or back to 1900 is certainly there for the asking. And of course, Cipla, which I think, again, is a story that has been evolving. It has had its fair share of issues with respect to, FDA import alerts. But I think it's still one of the better valued stocks within the space. So that is the pecking order for Pharma.
What is your own view on how to approach some of these stocks, not just L&T and what you expect from that, but also say something like a Tata Motors that lost almost 10% this week? How would you map that chart?
Yeah, the auto sector is very crucial for the overall health of the market. I think my understanding from the charts is that there is still one more leg up for the auto sector. But, as you recall from our last ticking stock interaction, I pointed out that I'm more favorable towards Bajaj Auto than any other stock within the space. I think Bajaj Auto is set to take out the all-time high at 2700 plus. So now I would prefer Bajaj Auto to Tata Motors. When coming to other stocks in the highly leveraged space, you would recall when we were bullish on the markets and calling for fresh highs to come through, we said we were very negative on DLF and we expected that to take out the 100 level. It was trading at about 140 odds in those times. And even now, we saw this week it hit a low of 103. I think it could still have much more downsides to come through. But from a trading perspective, risk reward potential is quite low. So you would rather wait for a pullback closer to something like 120, 125 to come through, and then try to act on it. But we are negative on the highly leveraged space like infra stocks and real estate stocks. So positive on auto. As I said earlier, it's very important for the larger health of the market.
Okay. Any specific stocks, Jay, that you could leave us with in terms of picks from the broader markets, even maybe from the frontliners, that besides the auto space, any specific stocks?
Yeah, there are two sectors which I spoke about the BSC FMCG space in the early part of May, as I was positive on it, and I even picked up something like a Bombay Verma trading company which had no coverage from the fundamental side, and that has moved from 400 to 550, and I'm still positive on the FMCG space. From a frontline stocks, Asian Paints is looking very attractive, but it needs to bottom somewhere close to 740, 720. Once it does that, I think we are looking at something like 900 plus for the stock. But it is very important to understand that a trading setup is made up of three components. One is the setup, next is the trigger and a reversal and trigger, and then you pull the trigger. So you wait for the stock to bottom around 720, 740. If it doesn't do that, don't do anything about it. Likewise, even Colgate Palmolive is positive. It's looking attractive for 2200. Outside the FMCG space, only last week we spoke about Coal India. It's moved up quite a bit, and I think we still have much more upsides to come through. I think it has been in a very sideways range for several months now. It's trying to break out of that. I think we're looking at something like 440 for Coal India.
All right, Bala and Sanju, it was a very enriching conversation. Lots of stocks discussed. So thank you for taking the time out, and you guys have a good weekend. With that, it's a wrap on this edition of Taking Stock. But before we go, let's get our colleague Agam Vakil in. He'll tell us about all the events that you need to watch out for next week. Agam.
Right, so we're looking at another action-packed week, starting off with Monday, 8 June, where we are expecting the German industrial production data to come in. We're also looking at the G7 summit to end on that particular day. Moving on, Tuesday, June 9th, we're expecting Chinese CPI and PPI data to come in, which will be another important factor when it comes to the Chinese economy. Moreover, and more importantly, we are also going to look at the MSCI, which will decide on the A-listed share inclusion. Moving on to Wednesday, June 10th, we're also expecting UK industrial production. As far as the US retail sales go and US unemployment claims go, those will be announced on Thursday, June 11th. And again, we'll also have Cera Sanitary Ware, where the board will need to consider the JV between the sanitary ware and tiles production. And finally, as far as Friday goes, that is June 12th, perhaps the biggest in terms of news for the Indian equity markets. We're expecting India's CPI as well as the IIP numbers to come in. Plus, we will also have the RIL AGM, and we'll also be looking at the finance minister, which will be meeting with banks to discuss the interest rate scenario. Other than that, we're also looking at the Greek debt payment due, which will be coming up in the IMF. So plenty to watch out for, even as we go into next week.
All right, with that, it's a wrap on Taking Stock. Thanks for watching.